Hey, what's up, guys? How you doing? So looking at the Ethereum chart, it seems as if this break of the trend line was perhaps a false break, and it was a deviation. Now we've got sort of moved back up, and this is why I said clearly that you need to stagger your stops so that you don't get wicked out and you don't fall prey to these kind of false moves. Having said that, it was worthwhile, and it still is worthwhile taking out maybe 10% of the exposure, given that we've got rate rise coming up in a couple of weeks. So that's going to play into sort of market moves. You've got gold sort of trending up. You've got dollar trending up. You've got sorry, rates yet to find the top, inflation yet to find the top. So we've got all of those things going on. So I think sometimes they can have a little bit of a break like that and tease a break after that kind of move up, and have more of a bull trap, and then you have a more concerted effort down with a proper sort of break. So I'd be cautious of that. I wouldn't think that it's time to go long. I think generally you need to keep on a sort of defensive posture, and especially this kind of trend line is quite steep. So you would not see these steep trend lines holding. So what you could possibly get is a blah 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 like that, shoot up here, taking out that kind of high there, and then coming down like this. Okay, so that would make more of a sense. You're not going to get a sort of continued move on this kind of steep trend line. Okay, so time to be cautious. Time to take. It was good judgment to take some chips off the table. In trading, it's never a certainty. You play the probabilities and you manage risk. And in this kind of scenario, if you have taken some off the table, then you're happy both ways. If it goes up, well, you've still got 90% of exposure. If it goes down, you've got some money to reinvest later on. Okay, so that's how you want to be. You want to try and neutralize any kind of emotional attachment to these things, and you can only do that when whether it goes up or down, you feel quite fine with it. You're looking forward to both of those scenarios in effect. Okay. Okay, so that's the Ethereum. Now the backdrop I was talking about in terms of what gold and some of the other things are doing. Well, look, gold was moving up, and it seems to have secured this high, and it's making a run for this trend, and even maybe the this top around here. Now, if we zoom out, we can see just got all these vertical lines and stuff going on. It's a little bit unclear, but let me just draw you something that happens quite a lot in the markets. It's a very, very good chart formation. You tend to get a sharp move up and then a down move like that, and then a bounce which can do that, go above that, and then it does more of a kind of retracement down to these levels. Okay, like that. But this part, let's get rid of this, let's start again. Okay, so you have a sharp move up, correction, and then a reattempt at the high. Sometimes you can go above the high and then do that, or sharp move up, come down, and then you can go here and then blah 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 like that. Okay, so where we are currently in gold is this move here. So it could do one of many things really. You could go above that high, you could just kind of like start to come down from here, or it could go somewhere along that area. So you need to just sort of factor in. But I think looking at the momentum, looking at what's been going on, how it's been behaving, I mean, I wouldn't touch it right now. I wouldn't be a buyer or a seller. I'd take some profits on this trend line, and then really be looking at the volume, see if the volume picks up and if the momentum can take it to the highs or even beyond, because I have another trend line which quite significant, which is on the weekly, which is this one here. That's above the all-time high, right? So do I think it's going to take that one out this time? I don't know. It depends on what sort of momentum you get, okay? But I would be sort of looking to take some profits as it moves up, and as he moves up to this line, as he approaches the highs, the local top highs, and also beyond that, because I think it is due for a consolidation lasting a few months. So I'd be looking for that, really. I mean, I wouldn't think that it's going to blast through the all-time high and start making some big moves just yet, because what it needs to do is kind of needs to consolidate just under the all-time high. Let's go on the weekly. Yeah, just under the all-time high around here, and kind of do some backfilling and then push up beyond that. It won't do it at the first attempt. So if you get any kind of moves around the all-time high, you need to be starting to take some profits and maybe moving the money into other things that can yield more profits in the meantime, while it kind of backfills, consolidates, and gathers some momentum to break free properly. Right, so DXY, like I mentioned earlier, it's still trending up, so that's another thing. It's just gone beyond that, so this is probably the riskiest time in terms of it pulling back. But there is this potential, and the way it's looking, it's looking quite strong. Well, it's looking, it could push all the way to that level there, and that would correspond with the rate rise coming up. Same with the 2-year and the 5-year. I mean, the 2-year is the one that seems to be kind of ahead in terms of breaking out, and you can see here that the Treasury market tends to foretell what's going to happen in everything else. It tends to be sort of leading indicator, and it just doesn't seem to be able to quite find the top yet, and it hasn't rolled over. I mean, I thought it taken out this kind of low around here. Let's just zoom a bit. This low here, when it does a higher high and then it breaks a low, it forms a new lower low, and then so that could be a break of a structure. But again, it hasn't rolled over. I mean, it's kind of attacking that high again, and I do have some long bonds, which long treasuries, which basically means that if this goes down, then I start to make money. So if it goes up, then obviously I lose money. So I'm looking at this level, and because I think if this high is taken out, then we can kiss goodbye to a double top, and we can ignore this breakdown here. And then what you'll then be seeing is this blue line, which is the high over here, being taken out, and then seeing a sort of topping process in the rate cycle. Okay, in terms of where inflation is, maybe that's the better play here, and it certainly seems as if it wants to try and take that and go for that line. I think that's what it's trying to do. So what I'll do then is obviously if that local peak is taken out, I'll be exiting all my positions. Maybe keep a little bit, because I think we are near the top, and you can never get them completely right. So, but then I would be expecting it to move up, and then I don't know, maybe even hit that trend line here, and then start to pull back, but definitely take that high out. Okay, so given those kind of backdrops, and especially that we've got the 0.5% rate rise coming up, that's going to be more front and center as we approach that. I would think the markets are going to kind of remain weak. Will they front run that rate rise well in advance, that is a risk. That's a definite risk. As in, have we seen these sort of lows, and as we get to rate rise day, we kind of do something like this. We move up from here, which is the Nasdaq. We move up from here, and then on sort of rate rise, which is the fourth, we do a lower low, we do a higher low, and then we move up. Well, yeah, possibly it could happen, especially the Nasdaq appears to be on some sort of support. I mean, you see this peak here, that's a support zone. And also, if it does a kind of symmetrical reverse head and shoulders, then this is the left shoulder, this is the head, this is the right shoulder, and it seems to be quite symmetrical, the neckline being there. So it could possibly do something like that. Okay, so if you do just draw a line through here, you've got that. Let's go on the linear scale. And then if you move that same line across here, then you find right about where you'd expect that to end. Okay, let's get rid of that. So yeah, so this kind of, because of that, you can typically see them kind of bottoming here, but on balance, I think I don't want to be longing here. I'd want to wait and see exactly what happens as we approach the rate rise day. If we can get this rate rise out of the way, then I think we could be in the clear for some momentum upwards in all risk assets, because I think we'd be closer to inflation peaking, rates, the treasury is kind of peaking and heading down, and then we would have factored in quite a lot of this sort of negative news, and we should be looking forward to inflation sort of coming down and some positive headlines coming through.